Welcome back everyone to my financial climb, where I'm documenting my financial journey and progress, as well as talk about things related to personal finance, investing, and retirement. My name is Brett. Today I want to do a little bit of a weird video because I started this YouTube channel a little late, so I didn't get to do this as early as I would have liked to do. But today I want to talk about my financial goals for the year of 2020. I just want to get it out there because I'm getting to the point where I'm starting to crush these goals, and I want to make a video before they start happening, because when I'm getting to when that's happening, I want to be making videos about it happening and not this video. So I want to get ahead and get this out there. Now, while these are my own personal financial goals, I think that these goals can be applied to a lot of people's own personal lives and things that they should strive for. Now, the numbers may be a bit aggressive for what you're trying to do, but they are still goals. Like, the ideas are still there. And while you may not be able to do all of these, if you're able to do some of them, I still think it would put you in a better position financially than maybe your peers or other people around you. So let's get started. Number one, and I think this applies to anybody and everybody, is pay off debt. It needs to be gone, needs to be out of your life. You need to dispose of it completely, because it's weighing you down. It's like trying to swim with ankle weights on, so you might as well shed them when you can. In my current position, I do not have a car loan. I took care of that 2 years ago, so I don't have to worry about that, and I'm going to drive that thing till the wheels fall off. I don't want to add any more debt when I am trying to make progress. If I'm continuing to add $500 a month payment, which is the average car payment in America right now. Actually, I think it's a little bit more than that. If you're taking that money out of your own hands every month, that's less money you're able to contribute, and that can add up to a lot depending on where you are in your financial life. If you're in your 20s, we're talking 2.6 million potentially that's robbing from you just on that 500 alone, not considering anything else that you're throwing down on top of that 500. So no car loan. The only things left I have are credit cards and student loans. I came into this year knowing that most of this would be paid off by probably around June, July, or summer, and looking at where I'm standing now, even though I had an unexpected expenditure in, I believe, March of this year, I'm still on pace to smash those goals. And the stimulus check kind of helped out with that as well. I would have done these goals with or without it, but it just helped a little bit more. I want to say that I entered this year with slightly north of $4,000 on my credit cards. Credit cards combined, I had Chase, Bank of America, and American Express. Those were my three balances, were kind of spread across because I consolidated my debt. And the majority of that was on JP Morgan, and then it's, American Express was whatever I had from the previous role that I did when I was handling debt paydowns for the previous years, and then Bank of America was part of another role. So that's kind of where all those were spread across, and I think student loans was somewhere close to 2,400. I think I'm going to be popping them up on the screen kind of as an overlay while I'm talking over this, but I think that's where I was at. Now, this has been probably 2 years coming now, where I've been trying to pay off all this debt. I became financially aware, I would say, maybe 3 or 4 years ago, and so I was aggressive with paying off the car. When I did back in 2018, it was when I wrote my final check for a little north of $3,000 to pay off the last payment, and now this is just kind of what I have left. I've been attacking it ever since. Once I get done with this debt, I'm going to be able to use those extra funds as jet fuel to get some serious savings going on. I'm going to discuss that in later videos on exactly how much I'm going to be able to spread out among my investment portfolio. But I seriously think that I will be able to save 40% of my income, which is really, really aggressive considering I don't make a ton of money. I wouldn't say I make a lot of money. I make pretty much average to the American household. So even if you're not making this by yourself, if you are with somebody in your combined finances, I think that my strategy can still apply to a household of two individuals making up this income or one single person making this income. So I don't think it's too outrageous to pull off what I'm trying to pull off. During this time that I've been paying off all this debt, I have been still contributing to my 401k. Now, I think that's where a lot of investment channels will get wrong, or maybe not talk about, is using their debt as leverage to invest money for the future. And I understand why they do it, because they believe it's a behavioral thing where people are not able to do, walk and chew gum at the same time, where they get discouraged because they just want to get their debt done, but they don't realize how much they are robbing from their future selves because they are doing this. And it's all about compounding interest, and especially if you're at a young age. If you're at a young age and you're like 25 or something like that, and even 30, even my age is pretty young. I'm 31 actually at this point. But the amount of money that you're not inputting each year is just going to kill you. And yes, you could potentially say, but once my debt is paid off, I'll be able to invest aggressively going forward. That isn't. You'll never catch up to what your younger self could have put away, even if you did still have debt and you're contributing. Some people think that they're not able to invest if they have debt, which is not true at all. What it comes down to is opportunity cost. And when you are throwing everything that you have at your debt, yes, your debt's going down, but you're also robbing from your future self because of the compound interest that you're able to make at a younger age versus when you're at an older age when all your debt is paid off. I would seriously consider throwing money down in your 401k or anything where you get at least a company match. Even if you don't get a company match, if you're consolidating your debt down to 3-4% and doing a one-time upfront charge of your interest for a full year, that's 4% versus whatever you're able to get in the market. And we'll talk about that in a later video, go more into the numbers, depth, detail, maybe some charts and graphs, and I'll kind of discuss exactly how much you're robbing from yourself depending on what age you are or how much you're putting in, what your company match may be. Also, the market or fund that you're particularly invested into and the returns that you're getting there. We'll break that all down in another video. That's a much larger topic and I don't want to get into all of it here, but it is a discussion that we need to have on this channel for sure. My number 2 goal, and one that I'm super pumped to get, is opening a Roth IRA. I've been waiting for this moment for 2 years now. While I've been paying this down, I've known that this is the next step that I'm going to be taking. So I'm super excited to get this underway. I've already been doing some of my research on who I'm going to go with. Now, there's a lot of different options out there depending on who you want to go with, the strategies that are out there on fees, type of accounts that you want to open. It's almost endless out there. We all see the commercials on there. Robinhood, Fidelity, they're everywhere. So what I've been doing is a little bit of research on who I want to go with, and I do think I have a couple options on where I want to go. I am thinking either Fidelity or M1 Financial, just because I've reviewed those a little more so than I have other candidates where I like their fee structure. So, and I think that they'll be more acclimated to the type of investing that I want to do. And so that's kind of where I'm at. I do need to still do a little more research and make sure that those are my best options, and then I'll just pick one. But as of right now, those are the ones that I'm kind of leaning towards. I think opening a Roth IRA is going to be a big help in diversifying my portfolio, because yes, a 401k is great and all, especially with the company match, but it also has its limitations, which is why I want to get a Roth IRA, because there are different ways that you can handle that one versus a 401k, and it gives you a little bit more flexibility both in taxes and also your availability to funds. Now, when I open this Roth IRA, I want to max it out. Now, I won't be able to max it out right away, obviously, because I just finished off paying debt, but it is a goal of mine. I absolutely believe I'll be able to max it out for the year's end. I think it's only $6,000 to max it out, and I should easily be able to do that before the year is over. Now, when I do have it maxed out, what I'm going to be doing is saving up any cash that I have available before the year is over and just compile it into one account that I have, just some separated savings account or a checking account. It really doesn't matter where it's at. And by the end of the year, when we roll over to January, I want to use that money, depending on how the market is, and take it and front load it into the 401k. Now, there are different strategies on how people invest. The wrong way is people try to, time the market, and they try to get at the bottom or sell at the top, whatever, and everybody's horrible at that. So the other method that people recommend a lot, and I see everywhere, is dollar cost averaging, and that is a great strategy, but I think there are also some benefits to front loading, which I think I'll probably end up doing a comparison video in later videos on the difference between the two, when it's strategically advantageous to do one over the other. I think that's something that we will get into and we need to discuss, because I think depending on which strategy you use, you could potentially make extra money. And because I'm not making a ton of money, I think it all comes down to strategy. Like if I was making 6 figures or whatever, I think this would be so easy. I mean, you could just throw your money blindly and probably make a ton of money. But when you aren't having the income like that, you're having to be a little bit smarter with how you deal money if you're wanting to build an abundance of wealth and a lot of money, like the aggressive goal that I am trying to do. I'm trying to hit multi-millions, like 4+ million, and I can't do that making the income that I have unless I'm smart about the way I'm doing it. So that's why everything is really, really thought out. So if the market is recovered at that point, I will absolutely front load it. If we're still kind of in the doldrums and we're seeing all of the quarterly reports for ILS companies and it's bad and the market keeps dropping, then I will probably go back and reevaluate how I want to handle it. I think I would at that point just dollar cost average, but at least I'll have the funds to make the decision at that point of what route I want to go. And then this is kind of a rinse and repeat going forward, really, is every year max it out as early as I possibly can, stockpile cash away, put it into like an emergency savings of some kind, and then at the end of the year, when it rolls over to the next beginning of the year, I can front load it again with the full amount. Now this end of this year I won't be able to do 6,000 in January, but I'll be close to it, probably around 3,000 I would think. But if I am being realistic with it, I won't have a full amount. So I will just be able to put in the $2,000 or $3,000 that I have at that point, and then just work over the next few months and get the rest of it to max out to $6,000, and then stockpile again. And then going forward, I'll be able to hit $6,000, $6,000, $6,000 every January, if that's the strategy that I want to go to. Also, while I'm working on this Roth IRA, it kind of brings me to a next step that I have, which is review my separate investment accounts, because at this point I'm going to need to figure out my next step. And while I'm working on this Roth IRA and maxing it out, it gives me some time to do some research on where I want to have that account at. Right now, I've had this account for a long time, but I have it with E-Trade. It used to be Option House Trading, I think, way back in the day, and then they got acquired by E-Trade. That's kind of where my account's been, and I've dabbled in there in the past, doing stock trades and things like that, but nothing too crazy. I think I only have $1,500 in there right now because I've pulled a lot of that out to do that car payment that I did 2 years ago. So I want to see if this account is the best account for me. I know that it probably isn't, because I've been doing some research in mutual funds that I've been talking to you guys about in an earlier video, and some of the fees aren't as great for me. They're not completely fee-free or investor-friendly. Some of the fees that are on there are going to cost me like $19.99 in order to do a trade for a mutual fund that I've kind of researched or been interested in at least. So I need to just make sure that I am in the right account for next year when I am maxing out my Roth IRA. I'm going to need to be able to put my funds somewhere else to be investing separately. That's not a tax advantaged account, retirement account. So I'm going to increase my flexibility and also prepare myself to start saving for a house. So that's kind of what I'm going to need to do my research in. Maybe I end up going with a Webull or a Robinhood or Fidelity or something like that. Maybe I am able to open a separate individual account within the same platform that I'm going to be doing the Roth IRA. Those are different options that I'm going to have to look into. All right, so we've already talked about a lot of things already. We've already talked about the paying off all the debt. We talked about opening up a Roth IRA account. We talked about stockpiling cash in an emergency fund in preparation of front loading the Roth IRA once the next year starts. And we also talked about evaluating getting a separate individual investment account outside of the Roth IRA, or at least doing the research to figure out if I need to open another one or not, because eventually I'm going to have the 10% in the Roth 401k, the Roth IRA, which I'll max out every year, and I will need somewhere else to put money in besides those two. So that's kind of what we've already talked about so far. So the fifth one is not really a financial goal for me personally, and as far as acquiring assets goes, but it's to start this YouTube channel. I came in this year wanting to do this, and I wanted to share my journey to see kind of where this whole thing goes, and if people can learn from that, then that would be excellent. That's kind of what I want to do, is inspire people to save more, inspire people to create wealth, just like I am. I'm not a financial planner, I'm not a CPA or anything like that, so this all is kind of for entertainment value. If people can take what they see, what I'm doing, and seeing it's working for me, and they want to apply it to their own situation, then they can. I'm not saying it's right, not saying it's wrong, not saying anything like that. However, I do have a very, very aggressive goal. I know a lot of people aren't wanting to shoot for the same goals that I am, but even if they go through the processes and the steps that I'm going through, I believe they will be in a better situation overall. I'm really excited to see where this goes. I'm really excited and interested in seeing how I'm going to interact with you guys and learn from your experiences and your journeys, and maybe potentially help you out by answering some questions that you may have on things that I've already experienced personally. And there's just so much opportunity, so much potential here that I'm excited to kind of get underway and get my first year under my belt, second year, third year. I have no idea what this is going to turn into, so I just kind of want to share along the way. And my sixth goal, now this isn't anything that I'm going to be able to do myself. This is going to be more so dependent on how the market goes, because if we're still not going any growth for this year, it doesn't matter how much money I put into the accounts, or based on the limitations that I have, whether it's a Roth and IRA and only being able to put $6,000 in or whatever else it may be. I would like to have my portfolio to be over $40,000, whether that's pre-tax, whatever it is. I'd really like it to be over 44,000, but I don't know if my accounts will be able to hit that. It all depends on how this market bounces back, or if it even bounces back. But I would like it to have over $40,000 in it, and that would kind of be my starting point going forward, being completely debt free, which I should hit in the next 2 months. I would like next year would be my first year accumulating wealth without having any debt to worry about. So that's kind of what my goal is for that. Again, it's not really a goal that I have complete control over. It's more so how the market reacts, but I can at least put myself in the best position financially, being 1, debt free, and 2, in the right investment accounts, or at least what I perceive to be the right investment accounts and mutual funds, depending on what my goals are, as well as my risk tolerance. If anybody is interested to kind of follow along to see exactly what it is that I'm doing to build up wealth and build money and cash, and kind of along this financial journey, and see if they are interested in maybe learning through my experiences, then definitely hit that subscribe button and follow along, like this video. Also share with me where you're at in your financial journey, kind of goals that you may have had for this year. Are you on pace to knock those goals out? Are you not on pace to knock those goals out? Maybe this coronavirus thing has kind of maybe thrown you off course a little bit. Maybe talk about some troubleshooting that you're doing. Maybe you are pulling back from investing a little bit to set up your emergency funds in a better way. I'm interested to hear kind of what everybody's going through right now, to see what kind of strategies or movements that we have done in order to put ourselves in a better position. That'll be it for me today. Look forward to making more of these videos and sharing my journey. I'm going to get to work, get this edited, and get it out there to you guys. And until next time, I'll talk to you guys then.